Hello, everyone, and welcome to Coffee with Innovate Finance, our podcast series where we speak to industry leaders on financial innovation and fintech. Our podcasts are available on Spotify, Apple Music, and Google Podcasts. My name is Roberto Napolitano, Marketing Director at Innovate Finance, and today I'm delighted to be joined by Karl Mallon, co-founder of XDI, and Georgina Woods, Head of Impact at XDI. Karl and Georgina, thank you very much for joining us.
Thanks for the invitation.
Fantastic. All right. Shall we start with you, Karl? Can you tell us more about XDI and your role as co-founder at XDI?
Sure. So we're XDI. The team behind XDI started in 2006. So we've actually been around for a while. Essentially, to try to see if we could frame our understanding of climate change through a risk frame rather than a sort of sustainability frame, because at the time, if you mention climate change, people would immediately say solar panels, but they wouldn't connect climate change to maybe threats to their property or impacts of extreme weather in a way that they could relate to. And I think we also we were getting a lot of interest from utilities and governments trying to understand the scale of the risk. And so we started to embark on the journey of trying to quantify the impacts of climate change to business, to government, and to civil society. And then maybe, realistically, about 10 years later, after we've been doing that, we realized that the interconnectedness of risk, if a power supply fails here, it stops a business running over there. If a water supply stops there, it affects this business, or telecommunications, transport networks. There's really a lot of connectedness, and that's where the cross-dependency initiative came from, and that's the shorthand is XDI. And then I guess more recently, we've realized that we have a broader role, I guess, in society to try and help a lot more groups to be able to get access to climate change data. And that led us to embarking on an impact program and hiring George Woods to help us to deliver that. George, maybe that's a good throw over to you just to describe our current work, which is probably a bit broader now.
Yeah, so it's really important to our company that our data and information about physical climate risk, actually makes a difference in the world. So as well as providing it commercially to clients who need the information to do their physical climate risk assessments and understand what climate change is going to cost their business. We also work with regulators and with civil society to make sure we're, I suppose, democratizing data and putting that information in everybody's hands. To raise the profile of just how much climate change hazards are going to cost society more broadly, as well as individual businesses and governments and individual homeowners and investors.
Thank you very, very much. So it sounds super interesting, the climate risk assessment that you're doing. Can I ask you both, what were the challenges that you faced when you started XDI? And this is maybe for you, Karl. And then what are the challenges right now?
I started life as a physicist and then an engineer, and I like challenges. And in my early career, I was doing a lot of work on emissions modeling, and I watched the life cycle of emissions modeling from boutique, from specialists through to the big consultancies, through to off-the-shelf products and things like that. And it's interesting watching how new capabilities come through the market. But also I was really interested in how you quantify the impacts of climate change, because, we're busy saying, well, we've got to spend money on renewable energy or electric cars or what have you. But what's the price of not doing that? And so it's quite an interesting challenge to say, what's the price of climate change if we don't do something about it? So in a way, there was a sort of intellectual challenge there. But what I realized was, in trying to do it, was that you have to move between disparate disciplines. There's climate science, there's meteorology, there's geology, and there's engineering, and then you've got to come out the other end and into financial modeling. So all of the metrics that we use for cash flow analysis or NPV or credit risk. And so you have lots of different disciplines, all of which are solid quantification disciplines, but they use techniques which are actually quite different. And so essentially we had to build a chain of analysis to be able to get from one end all the way through to the other. So it was very challenging. Thankfully, we had some big utilities in Australia that wanted the work done, and we had some government funding, and that enabled us to build some of the very first models that were able to do this. And I guess now the challenge is, as things mainstream, it's keeping up, because there's lots of different areas, whether it's the bond market, or whether it's mortgage risks, or even in stress testing by regulators. Everyone wants a different angle, and it's quite a job keeping up with it all.
Yes, definitely, and thank you for the answer. So it's quite interesting that you're mentioning it's a mix of skills and different areas of knowledge, like science, geology, financial modeling that you mentioned. So it's super interesting. Now, if we start maybe talking about ESG, that is, it's kind of the focus of many projects and programs. And we're actually hosting a conference every year called FinTech as a Force for Good, and we talk about environment, society, and governance. May I ask you, maybe Georgina, if you can give us, for our audience, a definition of what is greenwashing and what are the risks of greenwashing?
Well, greenwashing is really the broad term for dressing up something that is no good for the environment, in the language and clothes, and show as if it is. So it's sort of, trying to put green paint on something that's quite black and brown, and so I guess ESG is very popular now. I mean, there's a lot of interest in making sure that company strategies are aligned with environmental, social, and governance objectives. And so you see a lot of investment firms and banks offering ESG products. But with that comes this risk that, because this world is so complex, the science is complex, the financial metrics are complex, the investment strategies are complex, and there's a lot of opacity in where exactly money is, where it goes, what kind of operations businesses rely on. The whole economy is interconnected globally, and very few people really have sight on all of those interconnections. And so that comes with this risk that people are taking at face value the claims that an investment fund or a product is environmentally friendly, it is consistent with net zero, it's meeting social justice objectives. And if those claims turn out to not be true, of course, the fundamental risk of that is that we are failing to achieve those goals. And when it comes to climate change, the failure to achieve those goals is catastrophic and irreversible. And so there is this great need to make sure that companies that are making ESG claims are doing so consistently as well, I suppose. Not just greenwashing isn't just, I suppose, a problem of outright lying, but it's also if there aren't consistent metrics, if there isn't a standard to report to, if there isn't a reporting framework that allows information to be interrogated and understood, then it's difficult to compare different ESG claims because they're not based on the same data and methodology and metrics. So the risk, of course, if those claims turn out to be false, is that we fail to meet the goals of the Paris Climate Agreement. We fail to avert catastrophic climate change. And our data shows very clearly that if that's the case, we all stand to lose a great deal.
Thank you, Georgina. In terms of climate risk assessment, the metrics that you're using, you are an Australian company, right? You're based in Australia, but you have international presence. So can you tell us maybe more about your experience, doing this climate risk assessment in Australia for Australian companies versus doing it for international organizations? And do you see a lot of differences in terms of how people are using metrics and measuring this risk assessment, basically?
I mean, I think we're Australian based, but these days I think probably 3/4 of our work is international. So, a lot of our work is out of Europe. We do a lot of work in Asia, and we would have done stress tests, for example, for the Bank of England, for the Hong Kong Monetary Authority, in Singapore, in New Zealand. And obviously now the US is starting to be in the game. Obviously, capital is a global thing. And so there's a sense that the regulators, to some extent, are starting to collude a little bit to sort of learn from each other and try to move the whole industry forward. So we're seeing a lot of experimentation and sharing of notes and so forth. But probably what we've seen, the one area where it was, is the regulators want to really push as hard as they can to get as much material information as they can. So probably the European Central Bank was probably the most qualitative of all of the tests. The rest really want deep penetration, which is, are your mortgages at risks? Are the people who you lend money to, are they at risk of defaulting in a flood or a fire? What about the companies that you're lending money to, or the facilities they're financing? Are they safe? Will they be affected by sea level rise? And then another huge piece of work which is emerging is the ability to look at companies in terms of investment. So you might be investing in, say, McDonald's, and then you want to know, well, how vulnerable is McDonald's to climate change? So really what we're seeing in this whole space is like an arms race around physical risk assessment, because I think there's an increasing recognition that the climate change arena around the shift to decarbonate the economy is to some extent a policy shift. It's about how quickly governments implement policies that require the shift to renewables and the retirement of fossil fuels. The physical impact is at the whim of nature. How fast does the Greenland ice sheet melt? How much energy does the ocean absorb? How much will the cyclones move further towards the poles? How much more water is in the atmosphere that's going to come down as flooding rain? These things, there's no pen that's going to save you from those. They are what they are now. And so there's an increasing, I think, concern that these risks could really escalate and cause disruption. And obviously we just look around the world and we can see supply chain disruption, we can see crop failure, we can see, damage to business productivity and so on. So this is gathering momentum, and realistically, I think global capital is now saying they want to see it. It's a little bit like the GFC, the global financial crisis. They're kind of going, last time it was too late by the time we realized what was going on. This time they're saying we don't want to get caught by surprise.
Thank you, Karl. And are you seeing this policy shift that you mentioned? Are you seeing it in Australia? Are you seeing it internationally? Is it happening?
I think we are on individual regulator by regulator, but I think there is now a sense that there might be global coordination. George, do you want to talk about the ISSB? Would that be useful to where you think things are heading?
Yeah, I mean, I think on the global scale, there's no world government, of course. And so what it's really about is about coordinating and sharing approaches. And there has been, in the last year or so, this convergence around having a common framework for disclosing climate risk. And that's going to really help everyone have a sort of a comparable and consistent way of assessing exposure to physical risk as well as transition risk. When it comes to physical risk, it's a little bit the sort of underdone piece of it. There's been a lot of attention paid to trying to understand, scope 3 emissions in the value chain, and company exposure to litigation and reputation risk, and to the changing policy landscape for heavy industry and energy. But for physical risk, it's the side of the ledger that affects everybody. And increasingly now that we understand that there are a great deal of climate change impacts that are already locked into the system, we have to continue mitigating, of course, very urgently. But regardless of the mitigation effort, these catastrophic weather events and changes in global climate and weather patterns are going to continue unfolding and having a dramatic impact on human settlements, business operations, and people's lives. So there does need to be a way of consistently understanding that risk. And so the International Sustainability Standards Board, is taken on the job of trying to pull together a standard that can be consistently applied and adopted by regulators in the countries around the world. And a whole bunch of nations have said, that's great, we will implement that standard once it's in place, which will be really, I think, more useful for business because it means they're not trying to meet a whole bunch of different standards in different countries for disclosure of climate physical risk. And it also will help the investment community to be able to get a broad overview of where that risk lies, because it is not even. There's parts of the world that are facing considerably higher risk. There's sectors of the economy, agriculture, that are facing considerably higher physical risk. And so having that sense of a common disclosure standard across the world where people can see the spread of that risk, to understand its impact on their bottom line, but also, of course, to prepare and invest in, resilience, because investors are now saying, we understand our task is, yes, to contribute to achieving the Paris Climate Agreement goals, through our investment, but also to invest our money in climate resilient development and encourage the companies that we invest in and the asset owners that we work with to respond ahead of time to the threat of extreme weather, to save money and, of course, to save lives. Thank
you, Georgina. Very, very interesting. Now, I know that XDI is working on quite an interesting project. It's called XDI 1000. Can you tell us more about this project specifically? And if you have maybe any examples of your work at XDI that you've done for fintech organizations or financial technology organizations, because as you know, Innovate Finance is a UK membership association for fintech. So we really, like to see, and we really want to discuss ESG within fintech as well. So any examples you can give us? And yes, what is XDI 1000?
Well, I'll start with the overview of the XDI 1000, then Karl could go into the details perhaps. As Karl was saying, investors really want to be able to understand the physical risk-facing companies that they invest in. And so we have the capability to do physical risk assessment on the assets that are owned and leased by companies without those companies having to give us their data themselves. We can discover their assets using our system, our unique approach on this. And so we pull together a list. We have, quite a large number of companies in that data pool, but we pull together a list of 1,300 listed companies on the 8 major stock exchanges around the world to see if we could paint a picture of the landscape of risk around the world, which countries and stock exchanges are more exposed, and how does that exposure change over time? Because at the moment, the world is, we are seeing a lot of high damage costs from flooding, record flooding and return cycles of floods that are much closer than previously. And that's causing a lot of the damage now. But later in the century, sea level rise is going to be the dominant hazard that's causing a great deal of loss for communities and companies around the world. So we wanted to be able to paint a picture of how that risk lies around the world, and I suppose flag with the companies on those 8 stock exchanges that physical climate risk is actually an issue that affects everyone. I think a lot of companies associate climate change with big heavy industry and fossil fuel extraction and think of it as someone else's issue and someone else's risk, but physical risk is going to affect every company on these major stock exchanges around the world, and to different degrees. And it really is important if we want a resilient economy to get on top of that, and information is the first defense to the impacts of climate change.
So fintech. All right, let's have a let's have a little explore. So look, what we're seeing, I mean, a lot of our provenance was in utilities, water, power, telecommunications, transport, so on. And then a few years ago, the Financial Stability Board essentially issued an edict, which was they wanted climate change. They wanted to see some climate change disclosure from the large financial institutions. So what we're seeing now is so what we've seen since then is the larger institutions start to essentially do risk analysis at a to do the stress testing. Now, in a way, it's a little bit like we've got a convergence between the cutting edge of financial innovation and also the cutting edge of climate innovation. So you might call it climtech or something like that, which is basically that we've got how do you understand what's in there? How do you disclose it? And what are you going to do about it? And what we're seeing is some very some interesting innovation around, for example, where how banks start to screen for information, how they start to check whether something's going to be insurable, whether it's going to be mortgageable. And to some extent, this does raise some really interesting opportunities in terms of innovative financial products in this particular space. So just to give you an example, it used to be that when we looked at insurance, there was a sort of one size fits all for insurance. It's like, well, you paid some insurance, and I guess some houses caught a fire and got paid out. Some did, most didn't. Sometimes some houses got flooded and they got paid out, and the rest were all right. And it was basically it was a pool. Everyone put their money in, and a few unlucky ones drew it down. But now the technology is there to start to say, well, hang on, these houses are at risk of flooding, and so we're going to charge them a lot of money, and these houses aren't, and so we're not going to charge them very much. So what you're seeing is that the insurance industry, or the more agile members of the industry, are starting to become much more focused on products which target, for example, low risk providers, and then in a way turn their back on the ones where they think they're very high risk, or they're going to have to charge high premiums, leaving them, if you like, to the dinosaur players. We're also seeing, for example, some of the more innovative banks start to provide special, mortgage lending and so forth to go into to essentially pay for resilience, or to start financing people in a different way depending on their exposure to climate change or their resilience. So what's interesting, in case of any of your listeners are looking for opportunities, is we are seeing a fantastic gap in the market at the moment where there is a real need for some innovative products, where, if you like, it's a classical sort of space of, say, challenger banks or even challenger insurers to start to pick particular niche groups and provide services that hit them really hard, if you like, with a product that meets their needs. Because to some extent, we're seeing a lot of the larger incumbents being very slow to move and really struggling to keep up with the technology. And so we do see this technology gap, which is there's a lot of technology and it's not really being used. The information is there, but it's not being used to provide innovative products. So I would expect that we're going to see a lot more in this space in the next few years. Certainly, we've seen it with insurance and agriculture around using very heavy data to be to get much more sharply priced products. And I think there's a huge opportunity in the residential and commercial space for some of these challengers to come in with very sharp solutions.
Fantastic. Thank you very much, Karl. Super interesting. So the last question would be really about XDI. So what is next for XDI? Any exciting projects, any exciting news you want to share with our audience?
It's like, what are we going to share? Well, I would say we've got some, as I say, it's a bit of an arms race, and we're in the thick of it. So there's some things we can disclose and some things we can't, but we've got some really fantastic stuff that's coming through to the market, which is, Georgina mentioned this problem of comparing apples with apples. And the fact is there isn't a standard. So if someone says, if McDonald's says this is our risk, and Hungry Jack's and Burger King say this is our risk, they'll have done it with a different process, and you can't say which one's better than the other. You're comparing an apple and an orange and a banana, okay? But we've got systems that can do all of those separately, even without working with them. We can get their assets externally. We've got some very clever technology. So in a sense, we can turn them all into the same base, apples with apples with apples. Now, what's been really exciting is we've been delivering that through some partnerships with Morningstar and Sustainalytics to get that to market at scale, something like 15,000 companies. But we've been using the same technology to look at risk across the built environment around the world, which is really exciting. And we're hoping to have all of that ready to launch at the COP, which I think, George, do you want to finish off with any closing words on what you can prepare to reveal about the COP? So this is the conference of the parties, the big climate negotiations in November.
Yeah, we just do really want to be able to, I suppose, provide, as Karl says, a capability that allows a consistent risk analysis across the world, so that you can look at different geographies and say, well, where is risk concentrated? And our preliminary findings are that we can do that. We can identify areas of risk, and that's going to be really useful for governments, of course, to help guide their adaptation strategies, but also for investors to understand their exposure if they're particularly invested in one region of the world or another. So yeah, we are hoping to sort of do something a bit like the XDI 1000 benchmark for companies, but kind of do it on a geographic and sort of jurisdictional basis.
Maybe to close, given your listenership, Roberto, we're a little bit of like the agent provocateur in the market. We're up against companies like Moody's and S&P, but we're the independent underdog that, in principle, we aim to have the very best analysis, but to shake up the industry. And I know that your fintech listeners will be very familiar with that sort of space. But certainly, we're always looking for opportunities for folks who are trying to, essentially enter the market in different ways. And I would say there's great opportunities in terms of responding to climate change and providing solutions. So if anyone, wants a hand with some data, tell them to give us a call.
Thank you. And just to remind, if anyone is interested in XDI and what you're doing, what's the best URL? Because I think you have two different websites, right? So what's the website?
Look, xdi.systems is the place to enter. Send us a message, and also, as George said, we also provide a lot of data for public good purposes, so academic researchers or NGOs. So we're always very keen on collaboration to move the debate forward. So always working with an open door.
Fantastic. Well, thank you very much, Karl and Georgina. I think that's all for this episode. I'd like to thank Austrade, the Australian Trade and Investment Commission in the UK, that introduced us to XDI. And then, of course, I'd like to thank our guests, Karl Mallon, co-founder of XDI, and Georgina Woods, head of impact at XDI. And thank you, everyone at home, for listening. Keep an eye for our upcoming episodes. All previous episodes are available on our website. Take a look at www.innovatefinance.com for more insights on fintech and financial innovation. So join us next time for Coffee with Innovate Finance. It's bye for now.